All right, so I'm going to give some analysis here and follow up on the potential setup I talked about in the last video. So let's get going. If you saw the last video released yesterday, I was talking about a potential, as it was called, buy opportunity. Where were we? Resistance turns support. We were looking to dip into this area, see strength for a potential long. If you see what happened yesterday in this area, it didn't set up, which I'll get into and actually show what I did trade. But the setup did not come around. If you know my method, you will go to the 5-minute and we'll see that entries were not confirmed and understand what was going on there. So following up on that and seeing it not set up correctly is probably a good thing to show. And I'll show what also other trade that I took in the live session. So let's get in there. The 5-minute is really what needed to be seen, right, as it came down to test the old resistance turn support. It was also a support level here that showed up early in the session, but way before London open. So we had that, and then we had a bit lower, I think was the actual resistance level. But let's see what happened in real time here. So as we came down, now again, as I said, I was looking for the high volume to come in at these lower prices like this did initially earlier, really standing out from the background and showing strength coming in, but was not looking to, we're talking about into London session. And as we came down, here's where we started to get the high volume, right? And I'm looking at this going, okay, this is probably the setup, right? It overshot a little bit the area, which happens all the time, and we hit that huge strength right here. And if you trade my method, you're probably looking at this going, okay, good. Let's see if this confirms for the entry, right? Here it is, high volume strength coming in right in our area. Now we move up to test the 14 EMA, which if you have my course, you know this very well in detail and what I use it for. But simply put here, we want to know the balance of supply and demand, right? And we were just told that the demand came in where expected, not a coincidence, on very high volume, right? And so we know that the buying is very active, and that's a good start for the setup. But of course, you want an imbalance. You want lack of selling, lack of supply, along with your high volume demand buying, right? To give you the imbalance to say there's a high probability of moving up from the here. And that's when you enter the trade, right? So that's the main, one of the uses, the main use of the 14 EMA, certainly in this case, in this setup scenario, is to test for that selling, is to tell us about sell activity, right? And look at the volume. So here's my 14 EMA, right here, and we test it there. So even higher volume. What does that just tell you right there? There's actually more selling than buying, right? So, and again, look at how much volume that is. That is the highest volume of the day so far, telling you about supply selling right on the 14 EMA. So when this happens, now this is rare that you would actually get that much supply after high volume strength, much higher supply volume. But normally we'd actually look for, as you may know, if you know my material, a drop in volume here to say there's lack of selling along with buy activity to say we want to go long, right? So that's the first very obvious, piece of information here. There's way too much selling to go long. In fact, when you see something like this, the first thing I think is it's going to go and try to break the low. And from there, let's see if buyers show up again or how that plays out. But this says, no, do not look to go long, right? Immediately off of that sort of move, you're going to tend to come down, at least test that support again, and find out about buyers low again, just as you found out about selling high, right? So we come down, okay, there's some buy activity here, right? This is kind of telling you it may not happen. And how this clears up, let's say, for example, we got some very high volume demand really to rival that supply coming in. And we got some very high volume demand here. And on our 14 EMA test, we dropped in volume, we closed above it, and we came back to this area where there was large selling and didn't see it again. Remember, it's about price areas, right? Most of all. So if we saw some higher volume demand here really convince us, came back and saw the volume drop in this price area, and price just floats on through without any situation of supply coming in, then our imbalance has shown up to the upside, right? So to understand these things really black and white as they're playing out, know what you're looking for. So we came down, we saw a bit more buying. All right, not very convincing still to buy after seeing that supply coming in. So we get to the 14 EMA again. We test. Now the volume dropped a little, but it doesn't matter. I need to close above for my basic, most basic entry that I do. I need to close above the 14 EMA. So you see how accurate and helpful this moving average is for that. Some people use the 20 SMA, which is going to be really similar. It'll be right next to it. Maybe it's a slightly higher. So that's the use of that, and it came in handy here. And the reason why is we're looking for the lack of supply, we're looking for the demand to be active, and then we go into a markup style activity where, we expect an up move, an uptrend, rather than just buying into down moves, right? So that didn't confirm entry. Then we go lower. Now, by now, I'm already short EJ. We'll get into that, the euro yen. So from here, we drop again. With such a strong trend and so much supply already shown earlier, there's definitely no reason to be going long, right? Logically. And at this point, we don't even get to the 14 EMA. Here we do, still not ready to bounce, says the 14 EMA, right? Some demand comes in, not very convincing. 14 EMA, no, they're not marking up, right? And we end the day. So, no entry there. So, as we were looking at this stuff in the live session earlier, before the drop, when I do the 3 hours starting from here, and we finished here this time of day. So, right before the drop, we finished. And as I was saying, and I took the trade live, the short-term, medium-term environment is bearish. So that's what we know right now. We know the background has buying and has levels, and we've marked that up. And we'll see what happens there, right, as we did here. But short-term, it was bearish. Why do I say that? Because the price is trending down, and we're not seeing demand at all at some of these places where we tested, right? Here's that level again we're talking about. A lot of buying there. What happened here? It's not happening, right? We're going to have to go lower to find buyers. And whether that sets up or not, we see when it gets there, and we see that it didn't, right? So buy activity into lower prices, just not happening. Again, we saw this stuff live in real time. Said the short term now is now bearish. So I took a short, not on the euro dollar. And again here, this is not the high volume we were looking for to be going long, right? Nothing convincing there. So and it really showed up there, and then we just looked at it. You also see here supply coming in large amount there. Another warning sign, right? It's just above the 14 EMA as it's trying to push up. Well, not much demand, pretty lackluster. And then volume higher than that. This is actually an indicator saying supply overcoming demand, which I'll make another video about indicators and VSA indicators and what I use and all that. If you want my opinion on stuff. And so people asking about that, I'll make a video on that. I may be making videos just before the London Open, like Tuesday, Wednesday, Thursday, maybe make it a regular thing. Do some real-time analysis and talk about this and that, whatever questions you have. So hopefully that's all clear that there was no long entry. If you know my method, absolutely, you should not have gone long. You should have seen these things, right? Okay. Now, you may know my scalp method as well. And when you have situations where you are bearish in the short term, scalps, that you're able to take these things and how it's supposed to look. And this was the right environment for that, to not see the demand at low prices in a trending environment. So let me just show the trade that I did take. I have it marked there. So again, we are starting off the day. And the yens, why did I trade the yen pair? The yens were a little more, sort of less clear in the background. There was selling up high, buying down low. There wasn't so much a directional bias, and we did see some supply stuff coming in here, and again here, which is the London open spike, but came in as weakness, right? But scalps are not so dependent on the background, of course. Now, we start off with this very strong momentum to start off the London open here, and a really strong move to the downside. If you notice, this is, I have it marked, it's a fib, right? 50 fib here, 50 to 618 of a previous up move. So it's coming down to a fib retracement. Again, if you know my method, you know this is going to tell you about buyers, buy activity. And there you go. You see the volume is quite average. Normally you get to these places where you're going to test for buyers. You're going to find out about demand, right? You normally see a volume increase. And the higher it is, the more demand. But in this case, you know, it's barely there. It's barely anything. You expect that something's going to happen volume-wise, but nothing stands out as this being any sort of bottom, any sort of reason to go long, or overwhelming demand to stop this momentum of this down move. You know, certainly not there in the volume. Pretty average. Now, if you know my scalp method, this is an entry right here, right? There's also the candle pattern that I talk about in my course and pointed out in real time in the session that I was saying, I hope this candle pattern sets up because it's a nice confirmation. It gives a little extra, you know, probability and cleanliness to the setup to have this candle pattern happen here. Morningstar, Eveningstar pattern, where you can see it right here. These three. You can look up candle patterns. I'm not a candle pattern maniac or anything like that, but this is something I just noticed on the charts, and someone said, "Oh, Pete, that's a Morningstar or Eveningstar if it's the other way around pattern." I'm like, "Oh, okay, right." I just kind of observed it on my own. But anyway, so if you know my course, you know there's a scalp here. Now, as far as managing it, because somebody mentioned in the Discord about managing the trade in real time, first of all, so here is the entry. And now it's a scalp trade, so my stop loss was going to allow for, you know me and the fake breaks. Well, you know the market and it's fake breaks. So we have a resistance here. We get into the scalp, and the projection is, you know, if everything is in a perfect world all the time, which sometimes it is, well, let me draw the first thing that you call it a scalp. So what normally happens is after this candle pattern in the right environment at the right time, you test the support soon after. So as we're sitting here, right, and I know it's a scalp, and I'm not going to put some stop loss up high, you know, no 25, 30, 35 pip stop, anything like that. And this way I can also take smaller profits, risk reward stuff. Scalp is a scalp. But here to allow for the fake breakout, and it went beyond that to get out of the trade. And what I did in this case was I just put my stop kind of out of the way, and I was ready to close it manually because of spread and broker differences and whatever. I just wanted to do it manually. So the point is, you see this, you know, I had my window open on my phone to say, you know, if this goes beyond a fake breakout, then I'm going to close this short, right? So we come up, we come back down. And at this point in time, once this candle closed, you're saying, all right, we have our fake breakout. If it goes above it, now you really know you should be just getting out of the trade. But as I was saying in real time, if it does confirm a fake breakout, that's a bearish pattern. Very simply, of course, failing to break out, coming back into the range. And that's actually going to help the probability of the trade. You know, I know it's boring to wait. It's supposed to be a scalp. You know, what happened to all the momentum here? But that was actually a good sign at the time that happened. And a logical, clean, good, you know, decision on where to get out of a situation like this. You know, this is a 5-minute chart. So these are, you know, small pips here. It's not some big drawdown to allow this to either happen or break out for real and just cut the trade, get out. So after that, we ended the session. Oh, and someone was asking about targets. Now, a target on the scalp sort of trade is back to support. And see how it behaves. That's what I always say. Really, I should be closing some. I can close half. I can close more or less. Certainly stop at break even. I close about less than half, so about a 40% of the trade, give or take, something around that. I closed here and moved my stop to break even. Then you had the 618, you know, my material, and why I would pick that. Close more of the trade with some high volume coming in. Then leaving stop at break even, or maybe locking in some pips. I was doing some other things. I left the last portion of it on for an area that I had marked here and that showed some strength. And then there was my exit, which was about 50 pips on the last, whatever, quarter of my position that I had running. So a scalp turned into a 50 pip, multiple target 50 pip exit. Of course, that doesn't always happen. And someone was saying, well, I closed the trade too early, and I'm not sure where he closed it, whether it was support or 618, but yeah, this isn't going to happen every time on a scalp, So it's hindsight to look back. But if you notice here, where's the strength? Not too bad. Here actually was a lot, and that's why I closed more. So, but who knows? When you get rid of risk and you're going with the trend, occasionally your scalps will turn into in the end here, a 70 pip move or whatever it was. But that's not going to be every time. So, scalp is a scalp. I wouldn't worry about missing that. And try to go in on the next scalp and catch 50 pips, with a 12 pip stop. It's not going to happen all the time. So there's a trade I took. There's the trade I didn't take. What else? An analysis going forward, which I haven't done. I'm tired and I need some coffee, but we just saw really the bloodbath of buyers. They got run over. We looked on the 5-minute. It's not that they never showed up. They started showing up exactly where they were extremely likely to show up. And that's why I pointed it out. And you got the signs of strength, simply in these areas on the smaller time frames. But they just got run over. And, that's not something to be in the middle of. And there's no entry in the way I trade that would have gotten me in the middle of that nonsense. Let them figure it out. There's going to be winners and losers of big money on that situation. Let them figure it out. And, it was really a case of the supply, the selling, overwhelming this plan of buying through here. And normally when you cut through, right, we're talking about this area dipping in. When you cut through that and the supply tells you, no, you don't, we're going down, you'll end up a lot of times with a bar or a candle bar that closes on its low. Even the smaller time frames, they'll close right on the low because you just don't have the buy activity coming in against it to have that price reject. And you close right at the bottom after a situation like that is very common. You kind of see who won the battle, so to speak. Now, it doesn't take away the fact that there was some buying in here, and are there still positions in there? Probably some that they'll try to cover eventually. Some buyers certainly took a hit yesterday. But as a result of all that activity, we're ending up down here and staying down here. I think they stopped buying. So at this point, I'm looking at a bearish environment, right? But again, we saw the balance of supply and demand sort of duking it out there, but more supply, right? And ending up with a lower price result of all that activity, the effort, and then, not seeing really anything going on here as far as demand rejection. We have a clear trend. We broke back into the old range. We failed the markup. So if you're looking at Wyckoff and you go, okay, you're in an accumulation, you're going into a markup, you expect the uptrend now, and now that they've pre-positioned for that move, it doesn't happen all the time. Amazing. Or else it would be 100%. Well, it's accumulation, it's a markup. I'm gonna bet the farm. I'm gonna bet it all because Wyckoff template. But when it fails, at least my entry method saved you from a loss. And then you can see on the chart what's going on. Why is it failing? Why isn't this working? Right? Tells you. So it's like the templates are great to tell you what to expect, and if it veers off of that, that's information you need to adjust. Okay, we're supposed to go up from here, and supply is overwhelming price. Maybe we're going to do something else. Let's adjust and go from there. So bearish going forward. Today I'm looking for, under these circumstances, unless high volume tells me otherwise, I am now looking to short. We're back into the old range, and I'm just going to be doing things like drawing fibs, and somebody showed me how to do this so I get my 50 to 618 zone. Bam, just right on the chart right there. I don't have to draw the box and then delete the fib anymore and all that. It took a software engineer to figure that out and tell me. So that was that high and that high, but I'm going to be looking for weakness on up moves. Test of old support, term resistance. and looking for the next leg down. I didn't go through all of them. Now that's the euro dollar. I didn't go through all of them and see how they ended up. Oops. But I guess you'll have to come to the live sessions to get my full analysis. All right, guys. So I'm going to make some more videos. Try to do it regularly. That's 2 days in a row now. Come join the live sessions if you're interested. Link in the description. What else? I'm going to cover indicators and whatever questions you have. I'll make videos on it, right? And then throw in some analysis as well. So go ahead. You can ask questions. And I'll see you guys on the next one. Have a good one.